Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to break down the state of inflation. It's the number one market driver in the world. We're going to talk a little bit about PPI. We're going to talk interest rate expectations, but we're also going to talk about a major breakout. We've been all over this gold trade really all week long, and what we've had it really develop here has been a textbook breakout, an anatomy of a breakout. I think we've done fairly well trading this thing. This is a weekly chart. A lot of folks sort of give me static about it. Shane, why do you use weeklies? Why don't you use 15-minute and 30 minutes? We'll get there. We'll get down to those shorter time frames, but in order to trade those small time frames, you have to understand market state. You have to understand what's happening and what the big levels are. That's absolutely huge. It's overlooked by so many traders. You want to trade a 1-minute chart. You want to trade a 30-second chart, and you forget the big picture. Always remember the big picture is where the big money plays, and in order for us to be successful retail traders, we have got to be able to capitalize on what the big money does, period. You can't beat them. You can't go against them. They have too much cash. You don't have enough. I'm sorry to break it to you, but if you can get on their coattails, you can make your little amount a lot, and that's exactly what we tried to do here with gold. Talked about this level for a long time. We had an all-time high right there. Mark Corp, good to see you. Dibble, always a pleasure. Your high right there was 25.31.79. Your broker may be a little bit different, but this is spot gold. You can see it's really a 3-week triple top. That's what I would call it, and we have been religiously selling right in front of that level, and it's been very, very good to us. Well, what did I say yesterday? And hello, I look smart. Looks aren't everything. Hey, listen, we don't have to be smart to be traders. We just have to be able to trade. If you can trade, then you can spend the rest of your time on the beach. But thank you. Thank you for the compliment. In any case, we got a real nice breakout above that all-time high. So what did I say yesterday and the day before and the day before and the day before? We're going to short this thing in front of that all-time high, and then we're going to jump on the trend. Right now, that's a major weekly break. You're looking at about 2.25%. Silver's flying too. Absolutely. Silver's way up on the day. Watching 30 flat in silver very closely. We'll talk a little silver as well. Thanks for reminding me. This break right here is absolutely huge. And what we want to do is say, okay, Shane, what are you thinking now? I want to join it. The breakout's on. We have no reason to believe that a top is anywhere near in. Now, what did we talk about? I said, well, you're probably going to get some static, a little two-way action up there at 25.50. Of course, 25.75, of course, 2600. Those are big round numbers. Those are key levels. We're going to put out a video on key levels. I believe that's this week. We're going to release that on how to trade TV. Be sure to tune in. But you definitely are going to have some resistance, some two-way fights at these areas of natural resistance. Now, the question right now is how do we trade it? And I say that let's keep it very simple, very, very simple. We dialed this down to a 4-hour chart right here. You've got a nice sort of a low there, a nice spike high. And as soon as this thing develops, there it is. It's as easy as buying in on a retracement level. I love the 4-hour chart for spot gold. I really like it. It's a 24-hour commodity. The biggest challenge that we're going to have right here is getting that top to set up. So wherever that may be, this is sort of what your trade's going to be looking like. But right now, for me, the breakout's on. The trend is on. I definitely want to get long. So the real question is, okay, Shane, I want to trade right now. Well, unfortunately, you probably missed your pullback, which was right there, and now we're headed north again. Do we have a spike low right there? The low 25.23.55. The low right there is 25. Low right there is 25.02, 19. That's not a spike. You're going to have to go right from here. So your 30-minute market structure is really mirroring that 4-hour market structure. I want to buy a pullback, and I want to buy it from right in here. So 25.39.13. I would be looking at 25.9 or 25.39.75s. You're going to have to shade this a little bit in the spot market. If you wanted to buy 25.40s, I would go ahead and sign off on that as well. But we want to buy the trend. We want to join the trend. Right now, our ideas and our strategy has shifted from selling from right beneath that extreme and sort of playing the middle of this to playing a breakout. This is a textbook breakout. It's good stuff. If you got in on that break, congratulations, because that was a dandy. That was an absolute dandy. So, all right, guys, we got a lot to get to today, so let's go ahead and get to it. Switch markets. If you're looking for a broker where traders come to trade, I get this every single day. Shane, brokerage. Switch markets is our partner broker here. If you're interested in getting started, they can get you lined up pretty good. They do not accept U.S. clients, so you're going to have to find a different broker. And if you want some recommendations there, I would definitely say for Forex, look at Oanda. And if you need a futures broker or something like that, private message me in the room and we can sort of talk. I can give you some of my experiences and the pros and cons of some of the bigger. You just go right there, you get started, trading conditions, cost of trading, spreads, swap rates. It's got everything you need right there. So that's absolutely huge. So what today, this is our economic calendar function here at How to Trade. For me, my day always starts with the economic calendar, and typically that's on a Monday. I know exactly what's going to happen during the week and when it's going to happen. Why? Because these events shake up the markets. I'm a hybrid trader. That means I look for the fundamentals. I fall back on my technicals. What did we have today? We had PPI. We had CPI yesterday. So today is really all about inflation and our CPI numbers. So our PPI numbers. We're going to go ahead and break that down. But these were the key levels today. If you haven't checked out our economic calendar yet, you better consider thinking about it because it's a pretty good resource. So this is a trade idea that I'm going to put out here after we get off. Let's see, Dalibi, good to see you, Dalibi. Does switch markets work for Nigerians? Absolutely. Go ahead, check it out. Contact live support. Switch can get you up and running in no time flat. Free demo account. I get this question every single day, Shane. I've watched some of the videos. I've watched the live streams. What's my next move? Demo. Get on the demo account, start breaking down the markets, placing trades, get into our next live competition. We're going to have some details probably early next week on when that's going to be breaking. Can't wait though. This last competition was a lot of fun. Got to talk with the winners, and you guys put on an incredible show. And we're looking for this next competition to be relatively exciting. The last one was winner walks away $5,000 richer. You can't beat that. In any case, right here, what we're really talking about doing is getting involved in the markets from a position of strength. And what that means is you got to have a strategy. You got to have a way to get in and out with discipline. I'm going to put out a trade idea that really breaks down this Fibonacci Golden Zone. If you haven't watched our Fibonacci Golden Zone video, check it out on the How to Trade YouTube channel. It's a pretty good little video. Got in there and showed you what the Golden Zone is and how to trade it. We also got a great blog entry that gives you a complete breakdown on the How to Trade website. In any case, this is something that we're going to break down here in a minute. I'm going to put the official trade idea out after the stream. But this Euro USD was definitely in play today. Why? Because of the fundamentals. The fundamentals were everything today for the Euro USD. Let's see, DJ. Hello, sir. Watching from Kenya. Welcome, DJ. Welcome. Let's see. Week 37 today was all about the ECB interest rate decision and US PCI. So what exactly happened? Well, the ECB cut rates and PPI came in a little bit like CPI did yesterday. So we definitely want to get on with our fundamental of the day right now. What is PPI? The Producer Price Index measures the change in the price of goods sold by manufacturers. It's just another inflationary metric. Here's what you need to know. A higher than expected reading should be taken as positive or bullish for the USD, while lower than expected reading should be taken as negative or bearish for the USD. So what exactly did we get today? Well, is inflation down or up? You can see our PPI came in at 1.7 to 1.8 or 2.2. So that's a bit of a fall year over year. That's been sort of the trend with these inflation metrics. It's still bad, but we're not growing as fast as we were last year. So you want to look at something like that. But you definitely want to look at core PPI there as well, year over year 2.4. But what we're really focused on is these monthly figures right there. Producer Price Index month over month, 0.2%. That is above expectations, and it is above the previous release. That is not good. That is not good. So theoretically, what would that mean to the US dollar? It's hawkish. It's hawkish. Now, what I'm going to show you is completely counterintuitive to what we saw today out of the Euro USD, but that's what we're going to focus on here in just a second. What does this mean, really? What does PPI mean? I don't think it means a whole lot today. I really don't, but it's still showing that positive growth that a lot of us thought we were out of, but you can see the trend. Growth, flat, growth, flat, growth, flat. You guys get it, right? Inflation's down, inflation's up, inflation's down, inflation's up. That means that the Fed's not getting the job done. We can say that inflation's coming down year over year, but it's not coming down month over month, and it continues to grow. So you've got to definitely be careful with that. So if you're watching these PPI numbers today, it's sort of hawkish for the U.S. dollar. Now, the other market drivers that we need to point out here, and I'll talk a little bit more about this in a second, but was the ECB. The ECB, Connor covered it great. Really not much I can add to what he had to say, but we had rate cuts. The ECB decided they were going to cut interest rates and really bring about the next stage of monetary policy in the Eurozone. And the reason why was we're really worried about economic growth. Right now, we're worried about economic growth, first and foremost. So if we have jobs, all of a sudden unemployment's creeping up and we got to cut interest rates to kickstart the whole machine. What does that do to our currencies? Well, essentially, when you cut interest rates, you're pushing more money into the economy, which is supposed to make more jobs and free everybody's hands up to do business. That's the basic concept. That's the fundamental. So what happens to something like the Euro USD today? You've got rate cuts, which is going to be dovish for your euro, and then you've got a PPI number, which is hawkish for the USD. What does it mean? Well, I mean, the Euro USD should have came down, right? Didn't happen. And the reason why it didn't happen is a lot of these market drivers are either already priced into the market or they're what I call a delayed fuse, which means the market right now is just sort of going back and forth with buyers and sellers, and they're trying to figure out what the heck to do. In this juncture, or in this instance, you've got a real interesting move in the Euro USD. This thing should have came down right to our golden zone and paid us off. We didn't quite get a shot at it. This is going to go live here in about another hour or so on the How to Trade website. We'll probably also put it out on X, but you could definitely see that we didn't quite get the retracement, that dive down in there that we wanted, right down to about 109.50-ish, 109.60-ish to give us that great trade location to the bull. So I'm watching this closely. But if you want to get right down to brass tacks, right down to the nitty-gritty, what happened today? This market completely rejected the fundamentals. If you're a fundamental trader today and you saw those rate cuts from the ECB and all of a sudden Lagarde coming in a big way going, I think I'm going to go ahead and cut rates because we're in trouble here, that should have sent this pair down, and it didn't happen. So always be ready for that. If you're a fundamental trader, you need deep pockets to trade fundamentals. That's why I'm a hybrid. I fall back on my technicals. So Shane, right now, what do I do? Well, you can see this is sort of your weekly 38% right there. Just sort of put that in your memory bank. But what do I want to do? I want to buy it. I'm with the pressure. I would love to buy it down in here. No two ways about it. And I think next week on that Fed meeting, we're going to get a shot to do just that. But until we do, how do I want to scalp? I get asked every day, Shane, what kind of trader are you? A swing trader? Are you an investor? Are you a scalper? I'm a scalper. That's what I do. That's sort of my trade as a scalper. I want to buy in with this 4-hour Fibonacci retracement sequence, but I can't do it yet. I want to wait until I get what we call convergence, where my 4-hour 38% matches up with that weekly 38%, and it's all right around 110.45 to 110.38, somewhere in there. That's where I want to buy the pullback. So thus far, I want to see the euro rise maybe up there to 110.61, maybe another 10 pips, and then we get our retracement, and then I'm a happy camper, and then I'm looking to bid. I'll have the official trade idea out for you there, but this was a pretty darn good one. This setup I'm liking. I'm watching the euro very closely. Let's see. Crypto gambles. I got rocked trying to short the ES, made back break even shorting gold. I thought that the ES yesterday, the E-mini S&P 500 yesterday cleaned my clock. It really did. I know we have a couple traders in here. We have one in Switzerland that's just making the transition to futures trading. And I sort of, I don't encourage that for everybody. But for me, futures are where the game is, and that's what I mean by that is I have an exchange cleared contracts, which means I know what the price is. I don't have to deal with spreads. I got good, deep liquid markets, and all I do is pay a flat all-in commission, which can get relatively costly. I'm actually shopping for a different commission provider right now because my commissions are way, way too high. I don't like paying commissions. 30% of my profits were going to the brokerage, so we're going to have to fix that. In any case, this is a good look at your intraday look at your E-mini S&P 500. It's been very good to me over about the past 2 months. This summer has been absolutely fantastic for the E-minis. I started really focusing my attack. I've always attacked the commodities, but now we're definitely doing business on the indices. I shy away from the NASDAQ because it's way too volatile for me. The swings are too huge, but this stuff right in here, this E-mini S&P 500 is pretty good. So what do we have right here? Basically, my intraday signature, I always look at my 30-minute chart when I'm trading the E-mini S&Ps. Boom, right there, nice compression, little break. That's an absolute flat line. There's no question about it. We've done nothing, and now the breakout's on. We broke to the top side. So the real question is how high do we go? Where do I want to be long from? Things like that, things of that nature. I would love to see this sort of setup so we could buy a Fibonacci retracement outside of that. But our 30-minute chart is going to get us a little bit late to the game. We probably won't get that trade at least for another hour, hour and a half. Now, if I'm serious about trading right this minute, I have absolutely no problem. When I've broken to the top side of my Bollinger Bands and the breakout is on, I know the breakout's on, I have no problem playing a 5-minute chart. Matter of fact, I found a lot of great entries on 5-minute charts. And once it's on, once these markets are moving, 5-minute chart get very, very tough with something like that. 55.78, that's a pretty good one. I also have a breakout strategy that I posted on YouTube a while back, and it's predicated upon waiting for these brackets, what I call them brackets, but the Bollingers to open up, and then buying on your first bullish candle outside of that upper Bollinger Band, buy on that close, and you can see if you follow that strategy on this 5-minute chart, you're cleaning house right now as well. That one's also on YouTube. That one's on Forex Signals TV. So be sure to check us out. We put an absolute ton, Connor and myself, and some of the coaches that have worked here in the past, we put a ton of content out there, and a lot of it's pretty good stuff. I really like that Bollinger breakout strategy. I think it's fantastic, and especially when the market's trending and it's active. So right there, it's long or nothing for me. 5-minute chart, I think a person could definitely build a Fibonacci retracement sequence and get into some decent money. PM, good to see you, PM. Welcome. Let's go right here. So if I'm trading the E-minis, and I'm serious about it, which you should be at $12.50 a tick, you need to make sure that you don't lose all of your money rapidly. So the real question is what? Well, if you're smart money concepts, or if you're a value area trader, you can't ignore this order block right up here. This topside resistance zone is right just shy of our all-time high. So this zone right here, I probably would be focused on. That could definitely be robust resistance. It's a daily 1, 2, 3, 4, make quadruple top. So you definitely want to have one eye on that. Now, we are rallying right now, and it looks to me like we're going to take a good shot at that. So if I'm thinking, okay, how do I want to trade the E-mini S&P right now? The first thing I'm going to do is make sure I understand where this run may stop. There it is. Boom, 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 boom. Okay? So right there, I'm saying, okay, that's up there right around 566. I still have quite a bit of room up there, about, 80 points. Will we get 80 points today? Probably not. Tomorrow, maybe. Fed, probably. That might be an interesting shorting area to look at. The other thing that I would definitely look at is I would pull up my weekly, and I'd say, what does this weekly market dynamic look like? And it's ugly. It really is ugly. Massive plunge last week. The buyback is on this week. It looked like we were going to get real ugly and trade below last week's low and really jam off from there, and it didn't happen. I'm watching this first spike high, that hammer formation. I'm looking to short from there. But secondly, I would be looking at that top side resistance, that all-time high, as being a potential short here in this futures contract, and you're going to want to be keen on that breakout, because if we do break out, I think we go a little ways. Last thing I'm going to say about this futures contract is this. Number one, great volatility, great market depth. I mean, pretty much everybody trades the E-minis that trades futures, E-mini S&P 500. It's a good market. I like it. I found it a tremendous edge trading it. 62%. I was really looking to buy that golden zone. Didn't get it. I never trade 50%, but 50% comes into play a lot with the E-mini S&P 500. I'm watching this top to get washed out. This thing's going to wash out, and then I think we're going to be in a position to do what I call the big short. I don't know that we're going that much higher at all in our equities markets. I think we may trend higher, probably right up until election time, probably middle October, about another month. Then we're going to start looking towards options plays to the short side of this thing for significant money. So I'll talk to you about that when the time comes, but we're getting way, way ahead of ourselves. All right, a couple of trade updates. I've really neglected my trade updates. I tried to do these because I want everybody to understand what we do here. I get the question every single day, Shane, signals. I want signals. I want copy trading and signals. We don't do that here. We don't do signals. What we try to do is do some trading education. I give you my opinions on the market. Connor gives you his opinions. We trade some of the strategies that we have in the trading room that are put there for you to get you up and running with a viable trading strategy that's easy to comprehend. That's what those are for. Our trade ideas sometimes are strategies. I put a lot of pendulums out over the last few months. But most of them are our own read on the market and our own expertise. My expertise are Fibonacci retracements and fractal geometry. That's what I do. That's how I trade. And this was a pretty darn good trade follow-up. This was on the Aussie Swissy. Now, you're going to look at that and say, Shane, it's 12 days ago. Yeah, I went on vacation after this one, and we could afford to. That's for sure. But what I mean is, when you have something like the Aussie Swissy, which is a cross pair, it's completely, it doesn't have really anything to do with the U.S. dollar. I liked this market for a couple of reasons, and if you can see right there on the graphic, this is a weekly chart. We had a double doji on the weekly, and the recommendation was sell it at market. And if you go back, take a look at 12 days ago, I was saying sell it right there. Our key level, that's going to be your entry point. What is that, 50? It's very small on my screen, but you can see it right there. There's your key level. Our next level is going to be your profit target typically, and then the number of pips is going to be your gain. Well, I mean, this trade came out pretty good. And, this isn't really a case of leaning into the good ones and then avoiding the bad ones. This trade right here was an absolute jammer. So what did we have? We had really a great double doji formation setup. We were looking to sell right there, right around that half handle, 57.50, and we were looking for 100 pips. We made that money easy. Once again, a weekly chart. There was our entry. Boom, swept down, got it, and now the price is broken up against this trade. It doesn't matter. We already took our money. We already took the profit. This was a pretty darn good one. If you look at the daily, somewhere right in there. So right in there, we put the idea out, and what did we get? Realistically, the next day, boom, we got the big sweep lower, and we got paid off. So that was one that I wanted to highlight from before the vacation, and that was back earlier this month. Sometimes these trade ideas, they take a while to develop, and that's what trading's all about. They pay us to wait. They don't pay us to trade. They pay us to wait. In any case, that was a pretty darn good trade. I wanted to highlight that one as well. And then the other one that I wanted to highlight is we haven't had much luck with at all, and I'm to be brutally honest with you. You know the rules on my streams. If it makes money, it's the right answer. And number two is I'm not going to BS you. When I'm frustrated, I'll tell you, this one frustrated the absolute heck out of me because it was a damn good trade, and we missed entry by about 3 pips. I don't know that I would leave it on for right now. I'm going to talk about that in a second. In any case, this was one that I wrote on Tuesday, US dollar, Canadian dollar. You can see right there, we've got this thing drawn up and nailed perfect. It's a beautiful weekly Fibonacci formation. Right there, you've got sort of your top, and then you go to the nice big sell-off, and then the bounce, and 38% is just sitting there like a gift, like an early Christmas present. It's just sitting there, and what do we get out of it? My entry point was about 125, the quarter handle. I made a mistake there. I should have went beneath that quarter handle. I realize that now, but that's life, and that's trading. Sometimes you get filled, sometimes you don't. Take a look at where this market went to. 136.22.9. We were legitimately about a pip and a half, or a 1.1 pips away, not 2.1 pips away from being elected and getting short in this market. This is depressing to me. This is a tough one because this trade is an absolute banger. It banked the 50 pips easily. That was a trade that I really wanted to get. So the question becomes, hey, let me see, DJ, I'll get right there to you. Absolutely. When you get into a situation like this, and it's one of my rules, full disclosure, I lost on a crude oil trade Tuesday that I shouldn't have lost on. And the reason why was I didn't follow one of my basic rules. I was so eager to get into the market, back off of vacation, looking at all my credit card receipts. I got to make some money to pay all this stuff, right? I got to pay it off. I need to make up for what I just lost by not being in the markets. What do? I'm too aggressive. And it's obvious now. What happened to me was I had a trade and price action compressed right in front of my entry point. So the real question becomes when you're trading horizontal support and resistance levels, is this trade over? Well, we rallied up. We put a proximity test of 136.22.9 in. Our entry point was right there at 25. I mean, we just barely missed it. There's 2 options. Number one, you can pull the trade completely and say, nope, I'm not doing that. This trade's gone. I'm going to wait for a different entry. You could do that, and I would buy into that. The other thing you could do is instead of shading this thing at 136.25, you could move it right up there to 136.28 with the idea being that we are going to take that out and put in a hard test before we get that reversal. We could definitely talk about that as well. I don't think either one of them's wrong. For me, that's a hard call. We've had so many great trades. I mean, take a look at this stuff. I mean, we've hit it repeatedly. They've been good. I mean, that's good stuff right there. Do we take it again? Even this right here is pretty good stuff. Do we take it again? I'm going to leave it, but I'm going to move my entry point. Well, let's just hold it firm. Just leave your entry point at 136.25. We're going to sell it and see what happens. Do we believe this is the top of the market? I don't think that's the case. I won't commit to that. I'm not calling the top of anything or the bottom of anything. That's not what my strategy does. That's not what I do. Now, you may be a person, a guy or a gal that calls tops and calls bottoms. And that's great. God bless you. For me, not so much. I like to just get in, take that money off those levels, wait for the fight to ensue, wait for the buyers and sellers to start slugging it out, reach in and take that money out. That's what I want to do. If we get a chance to do it, frustrated though. We should have already been in and out of that and counting our money. That's okay though. We'll have other chances to trade. All right, guys, I want to talk a little bit about interest rates, but we do have some questions. If you have any markets at all you want me to cover today, today's a good day to do that. We've looked at gold. I could look at silver. We want to look at silver. I'm going to have to touch on crude oil because we're on the move, and there's a big time level in play for crude oil. And then also, let's see, I did have a question right there from DJ Fleek, the Euro Aussie. I'm currently in the trade. All right, ask and ye shall receive. Let's see, when was the last time I looked at the Euro Aussie? It's been a while. All right, my views. Here's how I break things down, and it bores intraday traders typically. But for me, it's a process, and this is my process. All right, as far as your monthly chart goes, what do you have here? You have a period of really long consolidation. We haven't moved or established a new value area in quite some time now. We could do something like this with our fibs. You'll notice that it gets really dirty in there. So I'm not a real big fan of that. I wouldn't trade those levels at all. But what I would say is we got that big monster rally, and then we came right back down to our value area, which looks to be like right around 165. I mean, there's no reason to reinvent the wheel. No reason to reinvent the wheel. If you got a big round number here and we're trading it, 165 is the point of control. That's where the war is, for lack of a better term. Let's see, gold. Yeah, Matthew, I already hit gold in the beginning. Just go back to the beginning of the stream. We hit gold right out of the gate. No problem. Hit our past streams module or our past streams portal and check it out. Yeah, hit gold short. All right, guys. I got 2 requests for gold. All right, I'll pull up gold again right at the very end of the stream. But in any case, right here, we've got compression. On the monthly, we're not trending. Okay, let's go to a weekly. What's happening on the weekly? A little bit more movement on the weekly, still predicated upon this big move. There's a couple of things that I could do with my weekly chart right here. Number one, I would try to be breaking down market state, meaning are we trending? No, we are not. What are we doing? We're rotating. What does that mean? It means that we had a nice big move here, and we retraced, and now we're rotating in here. 38% was gold. It was fantastic. You saw the bounce, boom. Now we're coming off. So, if I was asked my bias here, slightly bearish, but I wouldn't be looking for an earth-moving trend to develop. What I'm saying is if you're short this market, which is in line with my bias, I wouldn't be looking for, we're going to 156 or 158. That's not true. We can't say that. Now, if you're an intraday trader, you're looking at all this going, Shane, well, monthlies and weeklies, who cares? We've established market state. On the monthly, we're not trending. On the weekly, we've got pretty good price action and we're coming off. Now let's go down to our daily. Let's see what's happening on our daily. 4 losing days in a row. I could build a case to the short. Could I go Fibonacci there to there and build a support level? Yeah, I could, but look at this. There's a spike low. That's been taken out. I have a bearish bias here. Let's go to a 4-hour chart here. Let's walk this thing down and see where we're at. Okay. A couple of things I would point out. Number one, you do have a value area that's in play back here. I wouldn't put a whole lot of stock in that as a 4-hour, unless you're a strictly a 4-hour chart trader. I would say, yeah, that's a pretty good zone. Take a look at this, though. Interesting stuff, isn't it? Spike high where we failed up there at 38% on the weekly. Boom, we come off. We retraced. I'm bearish. I'm bearish here on the 4 hour as well. We failed at 50%. That was a pretty darn good sell up there at 165.38. This was a pretty good sell as well, 165.19. You could easily have put your stop loss above 50 and made a bunch of money there. So which way are you, DJ? You're currently in the trade. Which way are you? I'm reading this as bearish, bearish, bearish the entire way. I would much rather be short than long here. That's my opinion, but don't let me scare you out of your position. If you're long, that's okay. Just depends on where your trade location is. If you bought down here, you're still in the green. It's okay. Don't ever let anything anybody says scare you out of a position. So I don't want to hear anybody closing positions. Oh, Shane says I should be short. You don't have to be short. I have a short side bias, but I will tell you this. My entry point to the short would have been up in here somewhere. It darn sure wouldn't have been from here. There's a lot that goes into active trading. You guys can do it, though. Just learn. Take time and learn. It takes a long time. All right, let's see. I want to talk crude oil, then we'll wrap with gold. All right, this is good stuff right here. 30-minute chart. I drew this up earlier before we came on because I was eyeballing this level very closely. It's a great trade. This is a 30-minute chart on WTI crude oil futures, September. Why use this? U.S. session. If you're trading crude oil, U.S. session. Why? That's where the volume is. Traditional pit open, 9 a.m. Eastern. That's when they used to trade crude oil on the NYMEX. That's when all the guys would finish drinking their coffee. They would go in there with stacks full of cash and try to make their fortunes. I knew 2 of them. They were my mentors. They're the guys that taught me how to trade. They used to love the New York Pit Open. That's what they lived for. They'd take the train into the city. They would sit there and chug coffee on the sidewalk. They would walk into the NYMEX and get it on every day. And if they did their jobs right, they would walk out of those pits every day with money. Some of them, they'd make enough money by lunch. They called it a 3-martini lunch. He goes, we were 12 deep around the bar by lunch. They were rock stars. The markets have changed. There are no more pits. There's screens. There's you watching and trading on your phone. There's me in front of these giant screens. This is what it is now. Would I like to go back to those days? I never got to trade. That's all I wanted to be, was a pit trader. I never got that opportunity, but I am enjoying trading in front of the screen, especially these last few years have been a lot of fun. How did they do it? They knew when to trade, and I'm telling you exactly when to trade WTI crude oil or U.S. oil, whatever, right there. U.S. session, the volumes pick way up, the markets are liquid, and the volatility ensues. Now, you can have thin market volatility. That's very difficult to trade. Spreads get huge. Sweeps in price can be unpredictable. But when you have steady volatility and participation, the market ebbs and the market flows, and the market comes to you and it goes. That's what this is all about. So my basic Fibonacci approach, very simple. Open right there is going to be right there, 9 a.m. my time, or 7 a.m. Mountain Time in Dillon, Montana. Nice big sell-off there on the cash open. That is the U.S. session bottom. Boom, there's your spike low. There's your rally high up around 9 a.m. my time, 11 a.m. Eastern, right in that pre-lunch era. I'm not really I can't do the letters off the top of my head. So, I mean, this would be A period, B period, C period, D period, E period. So that would be an E period high. Okay, old market profile stuff. If you're an old pit trader, you know exactly what I'm talking about. And then we come off right there. Boom. What do we got? 38% right at 69.05. Beautiful trade. That's a great scalp right there. 69.04 bounces right up to 37. I mean, we're taking 10, 15 cents off of that trade at 10 bucks a cent, 4 contracts, 40 bucks a cent. That's beautiful. That's a $400 or $500 trade. Can't beat that. So in any case, this level's holding. I would be intraday bullish until this gets taken out. Once 69 goes, then you'll see a deeper sell-off. Probably be looking, the next port of call will be 68.58. That's what I would be bidding here. In any case, that's a sort of an intraday look at what I do or what we like to do. But I'm going to show you this one because this is by far one of your best trades on the books for WTI crude. I outlined this a few days ago. I want to jam it home again because it looks like it's coming into play. Right here, basic Fibonacci, spike high, spike low. What do you got? Big 2-week loser, bounce back week, up about 1.5%. 70 flat. 70 flat's not bad. Sell it. What's today's high? Today's high is we just posted 69.77. We're getting in that neighborhood. I would be scalping right in front of 70, 69.94s. That's a pretty darn good level. I would be very surprised if we took out $70. If we do take out $70, that goes back to our political correlation. That means there will be a prevailing belief that Harris is going to win the election, and that's pretty much what would send crude oil higher right now. And a lot of this, believe it, this bounce in crude oil this week is on the back of that debate the other night and the expectations that the market's been pricing since the presidential debate. All right, let's go. Let's see. We got a whole bunch of folks looking at gold. All right, here's gold, 30-minute chart. I just sort of went over this, but I'm going to go over it again because everybody loves gold. Very simple. This is a very simple read. Anytime you see something like an all-time high and then get tested repeatedly and failed, I've been talking about selling short in front of that level for a long time now. That's been pretty good. Boom, boom, boom. All those shorts paid. Now we broke. Now we change our mindset. The single biggest advantage you have over an institutional trader is what? They have to trade. You don't have to trade. You can wait for things. And another thing, your positions are small. Their positions are huge. Believe me, there are a lot of shorts that were shorting 2,500, and right now they're going along for a ride. You don't have to. As soon as you have identified these levels, a level of resistance, and it breaks, change your mind. Get long. Get long. Let's make some money. We're not trying to predict where this thing's going in the next year or two. We're trying to make money right now. So if I'm looking at this 4-hour chart, I'm buying. I'm to the long side of this. This is my Fibonacci retracement. I would use a 4-hour for gold. The only challenge we're going to have is getting a top to set up where we can buy our retracement. Personally, I would really like to see something like that, maybe where I could get a 62% or even something like that, where we actually confirm this breakout as a little more aggressive. As far as if I was looking to the short side of this market, which I am not, I would be smart about what I did. I would understand where my big round numbers are. 25.50s right there. Where's 25.75 at? 25.75. 26. These are the areas where you're more than likely going to get two-way action. And what I mean is a lot of times buyers and sellers are going to have a problem right there. We're repricing something that's trending. And anytime you have that, there's no resistance levels up there. A resistance level has to be established before the market can put its back against it. That's exactly, of course I can't do that very fast, but that's exactly what happened with this all-time high. As soon as that was posted, every time price got up there, the seller stepped in and protected it. That's all that happened right there. So what happened now? That's gone. Everybody that was short beneath that level, at least from the retail perspective, and a lot of the big guys, they're out. They got swept out of the box. Boom, those stops are run. Now they're stepping back saying, okay, where do I want to short this thing from again? And they're going to wait for things to sort themselves out and slow down. And odds are it's going to be right around a key level. So 25.50, you've got that in play. The next one's 25.75. The next one's 26. All right, those are the next three. And after that, what do you think it goes to? 26 and a quarter, 26 and a half, 26.75, 27. From a macro perspective, 27.50 is probably going to be your next 2,500 level. We traded 2,500 for a long time. 27.50 is going to be the next one of those. Something to think about there. So if you're building shorts, you're probably going to need to wait for this thing to slow down. If you want to try to short it right now, you can. Just stop yourself out up here. Don't go for the ride, because odds are we could definitely go to 25.75, and it could happen fast. So something to think about. Absolutely, crypto, you're welcome. Let's see. One more. Okay, silver. We had a request for silver in there. 4-hour chart. That's absolutely just a banger. I'm buying. Buy. Get rid of all of our old analysis. There's no reason to reinvent the wheel here. We have a real beautiful 4-hour chart right there. Spike low. You're starting to get a swing high set up. I'm buying to join the trend. No questions asked. Breakout outside of the upper Bollinger Band. When was the last time we had a breakout outside of the upper? Right there. When? Back on the 23rd of August. We rallied, pulled back, and went higher. This is a pretty good trade setting up for us. I think we got a pretty good opportunity here. We just have to get that top to sort of set up and give us a chance to trade it. Right now, you're going to be somewhere right in there. 29,498, maybe 29,41, something like that. Something to think about. All right, I have a whole bunch of private messages in the trading room. Let's see if we can. A lot of times, let's see. All right, no real request for a market. Okay, guys, I droned on long enough. We're going to cover interest rates tomorrow. I'll be digging into this chart right here, this CME Fed Watch. As you can see, there's an 85% chance of a quarter point rate cut next Wednesday. That's imperative. Everything we do is predicated upon this chart in one way or another, and we're going to cover more of that tomorrow. But we will also have that live. I'll have that Fed engagement for you live, and we'll sit here and critique Jay Powell, everything from what the words he says to the color of his tie. And we're getting into political season, and I'll tell you this, there's a lot going on. Don't take your eyes off the news cycle. At least check your live news a couple times a day. We're looking for monetary policy announcements. We're looking for anything to do with election developments. There's also been reports that the United States has approved Ukraine for deeper strikes into Russia with ballistic missiles. That's highly dangerous. I think that we're in pivotal times. The next 8 weeks are going to be great trading. Right in front of Thanksgiving, they're going to be great trading. Get in there, do it right. Join us here every day. Ask questions. Sure enjoy interacting with all you traders out there. If there's anything I can do, let me know. If you're watching us abroad on X, on YouTube, wherever, LinkedIn, go ahead and check us out in the How to Trade trading room. We got a lot of resources there. Like the trade ideas we recapped, we put out a couple of those every day. I'm going to put one out right now in the next 30 minutes. All right, everybody, thank you for joining me. Have a fantastic trading day, and we'll see you soon.